Now the third step, posting to the ledger. So we have here transferring of entries from journal to the ledger. So we will be using the accounts. What you need in posting? Journal, of course. You need the journal, the records in the journal, the entries in the journal to be transferred in the ledger. Then always remember the ratio is 1:1, meaning to say one account title is equivalent to one ledger account. We need to be consistent. If the account is debited on the journal, then you need to write it on the debit side in the ledger. Calculator, of course, for correct and accurate answers in the calculations. Now, I have here a general ledger. This is so detailed. We have the account title, the amount debited, then the description and the date on the left, then on the right, amount credited, then description and the date with the total, then extracting the balance. That's it. So this is so detailed, and I know it might be too much for you, so you will use this one, T accounts, simplified form of ledger. So T accounts, you just need to draw capital letter T with debit on the left and then credit on the right. So as you can see on the screen, then account title will be on top, then date and amount debited on left and then credited on right. So it is called T accounts because you can see capital letter T there. These are the examples. Then totaling debit side and then summing up credit side, then subtracting the two to extract the balance. The purpose of the ledger is to extract the balance to identify how much was left on that specific account title. Ledger is a summary of a transaction or summary of one account title and the transactions under it, and then you need to extract how much was left on that specific account. So if we have here the given general journal from the previous journalizing that we did, how do we post this to the ledger using T accounts? So remember, one account title is equivalent to one ledger account. So you can identify if you are correct in doing this if you have counted your account titles and then it was matched on the number of your ledger accounts. Now let's start with the first one. So in posting to the ledger, first draw the T accounts with debit and credit. Then first look for transactions involving the same account title. So we will start with the first one, of course, the first on the list. So cash. And for cash, we have 1, 2, 3, 4, 5 transactions present. So meaning to say we have 5 transactions involving cash. Next, transfer its amount to corresponding side, debit or credit, and indicate the date. So for example, the first cash, we have debit. So you will transfer it to the debit side also. And same goes through with the remaining. Cash in the January 7 transaction is credit. So you will credit the amount. That's it. Then debit on January 10. Indicate then the dates on the side of each amount. So after transferring those amounts in their respective side, then sum up each side, then get the difference of the two total. So here we have debit 80,000 and then 6,500, so 86,500. Credit 5,000 plus 17,000 plus 2,000, we have 24,000 pesos. Subtracting the two, you will get 62,500. This 62,500 is the extracted balance. So you will put the difference of the two total under the side of the larger amount between the two. So between 86,500 and 24,000 pesos, we have 86,500 higher than 24. So we need to write down the amount here and then double rule. Write BAL, shortcuts for balance, on its side. This is now the extracted balance or the remaining amount of the account, meaning to say the transactions involving cash. After those transactions, summarizing those transactions and debit and credit, computing and everything, the balance or the remaining amount is 62,500. And usually the balance, or if it is zero, the difference between the two is is put under the normal balance of the account. So cash is an asset, so normal balance is debit. That's why the balance is under debit. That's it. Now let's do the remaining T accounts of the account titles. Let's proceed with Martin Capital. That's the second one. So we only have one Martin Capital involved here in our journal. So just simply create a T account, debit credit, then write the amount 80,000 on the credit side since Martin Capital is credited here in the journal. If we have one amount only, then simply bring down the amount and that's the balance. Now let's proceed with equipment. We only have one, so just draw T accounts with debit on the left, credit on the right, then input the amount with the date since one amount only, so bring down 17,000. Accounts payable, we have two, so here we have credited on the first one, so that's January 4. Then on the second accounts payable, we have January 17 debit. Since we have both amounts on each side, then totaled each side, which is 17,000, the same. Subtracting the two, we have 0. So 0 is the balance, meaning to say we don't have any accounts payable left since it has 0. Next is supplies. So we have only one supplies, 5,000, bring down 5,000. Service income, we have two. So January 10 and January 21, copying the amounts, transferring the amount. So adding it, we have 20,800. That's the balance, then double rule. Next, accounts receivable, we only have one. Debit, 14,300, so balance is 14,300. Then the last one, rent expense, debit 2,000, so the balance is 2,000. Now for you to identify if you have correct answer, let's count how many account titles are involved in this general journal. So we have here cash, Martin Capital 2, 3 equipment, 4 accounts payable, 5 supplies. We don't need to count again cash because we already counted it here. Then service income and accounts receivable, rent expense. So we have 8. So count DT accounts, 1, 2, 3, 4, 5, 6, 7, 8. So we also have 8 T accounts, meaning to say we have correct posting to the ledger. So 8 account titles equivalent to 8 T accounts. And that's it. That's how posting happens. So thank you for watching and see you in the next video lesson.